Monday afternoon. Markets are still trading right this minute, but about to close. We just wanted to recap, go over our last chart video, which we did Thursday of last week. And we showed that the market had probably bottomed out as wave C of B here. We had already started a 1. This is the chart that we posted, and we haven't altered it. We left it just like it is from last Thursday, showing what we expected should happen. The ABC two-wave correction extended a little bit, lasted into Friday. Everybody was nervous about what would happen with Corona over the weekend, and this made most of the world turn extremely bearish because of this close. And everybody was looking for a big move down today, but as you can see, that isn't what happened. So the market gapped up today instead, so we have an A and a B and a C for wave 2, and we've added this, the B and C right here, for this wave 2. We left our lines, left our numbers the same. Another thing we've added to this chart is these gaps, just to show everybody, if you're familiar with island reversals, this is one of the prettiest island reversals you'll ever see. They don't happen that often, but this one is really pretty, so we wanted to show it. Whereas last week when the market gapped down, we gapped down right in the micro degree wave 3 of subminuet wave 3. This is right where a gap should be, and it was a pretty good sized gap. Then we finished 3, 4, and 5. This area right here, this sideways action, is referred to as the island. In Elliott terms, though, it created the minuet wave 1 up, subminuet ABC to correct it, minuet wave 2, and then right into 3 of 3. We have a little 1 and a little 2 going into the close on Friday, and then gapped up again today, and this creates the island reversal. So a gap down last week, create the island, then a gap up. Now all the shorts are trapped down here in the island, and that's how that works. And that's a pretty good it's a simple chart pattern once you learn it, but it does indicate that the market should move higher. Also corresponds with our opinion of the wave count. Sometimes this island reversal, depending on where it happens, can be at the very top or at the very bottom of a market, and can be the signs of a really big market move. But in this case, it happened at the bottom of a B wave, in our opinion, and the 1 and the 2. So although we will see a significant rally take place, it won't be like if this would have happened at a very bottom, like say back here for instance, or up here. So that's all for this. We just wanted to recap this chart, and we'll show a little bigger time frame now. We've added some more to this chart, 100-minute chart, and this is the cash market also. And it shows the 1 and the 2, our trend lines, our channel lines. Also, wave 3, what we're in right now, and these are all the targets that we're watching. We hit the 38.2% retracement, Fibonacci retracement last week, and that's been exceeded today as our wave 3 up continues to play out. The next target, anytime you finish a 5-wave pattern down like this, is wave 1 as we're counting it. The market goes back to the 4th wave of the lesser degree, which is right here, and that's where the market's headed to right now. This also corresponds with a minimum calculation where C, our C wave that we're in here, would be equal to 61.8% of the A wave. So C would be 61.8% of A. And that also corresponds right at this same exact target area of the previous lesser degree fourth wave. So that's a target that we can watch. After that is 50%. And at 28.9264, C becomes equal to A. And then the 61%, 61.8% retracement of the entire 5 waves down is at 29.3449 right here for 5 of C of 2. And right now wave 3 is going to have to extend, or either wave 5 is going to have to be the extended wave if we're going to reach these upper targets right here. So this is what we're watching for now. Based on this recommendation last week, traders bought the SPY, they bought call options, and they bought futures. And for those traders that did that, we've got stops right now at the top of this little B wave right here. We put stops there this morning after the gap. Market never did come down into the gap and is extended higher all day long. So we'll be moving those stops up and following along with the market. And here we want to see all of 5 waves up of 3, want to see the 4th wave correction, and then we want to see a 5th wave. And we'll try to keep moving our stops up and follow that wave pattern. So that's it for today. We'll be back as soon as we have more data, which will probably be maybe not tomorrow, but probably Wednesday or Thursday at the most. And if anything happens to violate this, which right now would be a decline, back below this area right here, overlapping the 1 wave. And it is possible, this is a 5-3 pattern, 5-3-5 pattern here. The market could create some kind of a 5-3 pattern here, which we would, at some point, that would be a WXY. We'd label this as W, this is X, and this would be Y. This is a corrective pattern, and it can take many forms, so we just have to keep watching and watch these short-term charts and see how these subdivisions, these subwaves play out. So we'll be back probably on Wednesday.